All right, so today we will talk about why I don't trade breakouts. A lot of people actually trade breakouts, and I have nothing against it, but breakouts to me seem like the risk and reward is very, very off. Here I have a chart. Obviously, not all cases of breakouts are like this, but this is an example why I don't trade breakouts. So in this chart, this is Neo, and some people might actually see this as a potential inverted head and shoulders. And I would say it's a pretty valid one. Although right here we got a little invalidation, but then again, that could have been the head or this will be the head. Regardless, it looks like a pretty solid inverted head and shoulders formation. And the breakout would probably be right here. Or I could find multiple here that you could trade for a breakout. And I'm not saying that breakouts don't work and that people can't make money from breakouts, because I know that a lot of people actually do. But check this out. So we have this breakout. We can also have this breakout right here. But look at the move up from here to here, which was the top. That's a 2.62% move up, just for illustration purposes. Although after that, you get a 12% move down. This is one of the primary reasons I don't trade breakouts, because when you're trading breakouts, one, you should always have a plan in place. Regardless of what you're trading, you should always have a plan in place. Especially if you're trading all-time high breakouts, it's even harder to know where exactly you're going to take profit. So for this trade, I might have set a profit taking, probably, which is funny because it literally almost hit there, but I probably would have set it right here. A prior minor demand level, a 30-minute demand level, potentially turn supply. That's probably where I would have set my take profit, which it never got there. And before it even got there, it comes down 12%. So technically speaking, hindsight 2020, you are risking a 12% move down for a 2.62% move up. So as we know, trading is all about risk and reward. So obviously in this case, it didn't really work out. And let me show you the other case from this chart as well. So this breakout right here scored, whoever traded this breakout, a potential 2.27% move up. But in reverse, if you did not get out quick enough, you were open to a 18% move down. So when you trade these breakouts, the reason the risk and reward isn't the best in your favor is because it already moved a lot prior to breaking out of it. So for example, and I'll tell you guys what I trade after showing you guys. So, you know, for this breakout to happen, it has already traveled a total distance, well, before the breakout, a total distance of 5%. After that, it goes up another 2.62% from that specific level, and then it comes down 12%, which makes a lot more sense because, you know, it goes up so much, or even if you count this part, it goes up so much, which makes the correction fairly fair, because you get the 4.23% for, let's just say, total move here would be a total move of 12.69% up, and it's down 12.06%. So here we clearly see it's pretty fair. However, if you're a breakout trader, you're only capturing the move, propelling it after it has moved so much already, which makes your risk and reward imbalanced. Here, as you can see, it moved quite significantly for a total of 18.64%, and then it moves an additional 2.27% before coming down 17.81%. So again, that correction was pretty fair. However, people don't see it that way, and whether you're a breakout trader or a momentum trader, you must have a strategy that wins for you. Again, I'm not saying that breakout traders don't make money, because I know breakout traders do, and I do rarely trade breakouts. But when I do, I am also ready for that loss in the case that it loses. So you might ask, what do I trade? And what is a better risk reward in terms of risk reward? I like to trade reversals. So I like to trade a move down into demand or a move up into supply, and I'll catch the reversal. So as you can see here, this was my Neo chart. Let me just get rid of all of this. This has been my Neo chart, and it has worked quite well. And I also post this in my Discord if you guys are interested. We're a pretty solid team. As you can see, everyone pretty much talks, and a lot of stuff goes into our newsletter, our watch lists, and things work out pretty well. So we already said coin is going to go down, and then into our demand level, which it did today. This video is probably going to be released later, so you probably, your chart probably will change or look different. But the main point of this video is why I don't trade breakouts. But let me show you what we initially thought of coin. So coin, we've been watching for some time, and we said that they might still have more of a pullback. So our wave 5 target coming soon, coin. So here we see that it is about to hit our demand level, which it did today, and ended up coming back up pretty strong. So it tags our demand level and it comes back up. Now, why or how do I find these demand levels will be in another video. But as for this video, this is exactly why I like trading reversals more. Because the move, you could capture whatever you plan to capture, and you could potentially capture even more than you plan to capture. For Neo, this is a perfect example. This demand level was drawn for a long time now. Let me actually see if I can find it. Yeah, 106. This is what, 28.29. Yep, so you get this 28.29 level. This is our level that we are looking at. And this is the exact same level as you can see here. And this is the exact same level you see here, the 28.29 level. So we draw this level, and it is what we call a demand zone. So this is where we believe that institutions are racking up shares or whatever the case might be. And this is a level to watch. Besides that, we also see that Neo is in a falling wedge, and it's been reacting off of it. So it has reacted 1, 2, 3 times already. But as you can see on the prior chart, every time it has tagged this level, we get a pretty significant move up. First move is 12%. Second move is 22%. And currently in, actually the fourth move, the third move is 8%. And then the last move recently again is 4%. And we don't know if it's going to continue to go up. So as of right now, it's 4%. And this is a perfect example of why I trade reversals and demand levels, because you're able to capture a humongous move. Whereas you saw, if we traded the breakout, we captured 2% over here, and we captured 2% over here, versus a 12%, a 22%, and a 7.46%. And if we add in the stop losses for the purpose of illustrating the risk reward, I probably would have put my stop loss beneath this this falling wedge trend line, or even beneath this demand level, which if we did the trend line, that's you're risking close to 1% here. You're risking close to 0.5% here. You're risking close to 3.62% here. And you're risking close to 2% over here. Or if we want to be more strict with it and say we're going to put our stop loss further below the demand level, you would still end up, I believe, you still end up pretty higher. So here you have a 6.07% move. Here you will have a 5.24% move down. Here you will have a 7.55% move down. And last but not least, you will have a 6% move down from those levels into both of our stop losses. But risking 1% for 12% or risking 6% for 12%, both of those are already more than a 1-to-2 risk reward ratio. Here, the 5% for 22, that's already a 1-to-4, or even here for the 0.32%, you're risking literally a 1-to-20, not even. You're risking a 1-to-44 risk reward ratio. And here you still get that 1-to-2 or even a 1-to-1 if we go a little lower. And here we don't know yet because we don't know when the next pivot high is formed. But as you can see, the numbers are outstanding, and this is exactly why we trade reversals rather than breakouts. And again, you're going to find your own trading style, and when you do, you will know how to trade. But for me personally, I hate and I don't like trading breakouts. God bless the ones that actually make money from doing so, but this is why I trade reversals, aka demand and supply zones. Thanks for tuning in, and this video will probably be released Friday, so stay tuned for our Sunday video where we will give away a whole month of calls or puts.com. Let me just show you guys what it did today. Affirm, we got a golden call at 12:03 and 12:33, spot price $74. We go to Affirm, go on the 5-minute chart. This is where the sweep came in, 12:03 and 12:50. So 12:33, 12:03 would be right here. And then here again, and then we get a 6% move up after that sweep came in. So stay tuned on Sunday. This is a powerful tool. Always trade with powerful tool and a powerful team. So stay tuned. Sunday, everybody is getting 1 month off completely free, and hope you guys like it and hope you guys subscribe. As always, don't be cheap on yourself.